That's how it's supposed to work. Hey everybody, welcome to the closing beat. Happy Thursday, believe it or not. This week is going by pretty quick. I don't know about you, but this week for me is going by real quick. We're Jazz Wealth Managers, financial advisors, investment service. We help people with long-term retirement investments. We build and manage our own portfolios. They're right on our website. You could just click portfolios. You can see a whole list of them there. Fully transparent. We'll tell you anything. You can ask us any question to us. And we have no expense ratios. They're commission-free funds that we build there on the website. So hopefully you'll check us out. We do this show here just as goodwill. Maybe we'll teach you something, help you in some way, and maybe you'll keep us in mind. And if you got that all covered, maybe you'll tell a friend or something. So here we go. We're going to cover the stock markets today. By the way, Monday, new set. So the show will be coming to you from a new set on Instagram. I've been kind of updating along the way, and tomorrow's post video here on our channel will be sort of an overview of the mess I made over there. Well, anyways, if you're one of our customers tonight, we're doing our Wine and Wealth class. You already have the email in your inbox. We're going to cover high interest savings accounts. Just quick class, 5-10 minutes to overview what they are, how they work. We're also going to cover this yield curve thing you've been seeing about. Isn't it kind of funny that yesterday I brought this up, and today and on all the financial media, what are you seeing on there? Like, I know they're not watching me, but who called it first, man? Who helped you out first there? Watch yesterday's video. We covered that. We're also going to just go do an overview with all kinds of crazy data tonight for our customers in the Wine and Wealth. Well, hey, we'll get started here. By the way, if you can't make the Wine and Wealth, I'm sorry, one last thing here. This is our dojo. We call it the dojo. You got the stock market data in there, but if you can't make it to Wine and Wealth, you log into the dojo, and you'll see it as the most updated video there once we have completed it. And you can see all the different videos we've ever done for customers. Look at how many that are just sitting in here. Tons of them. I'm not going to go through the whole page there. And you can also follow along with the markets just like I do here. You can see your charts. You can follow your stocks right there on our homepage. So we're going to keep building on that, keep expanding. Let's start with the markets. You got a pretty crazy rally today, right? You got the market strong, a lot of tech-related stuff. Semiconductors, we'll cover that. The Dow higher by 216, sold off a little bit there at the end of the day. But if you look at the chart to your bottom right, what do you see there? You see every 5 minutes. That's a print of every 5 minutes of the market today. What happened? Do you see any real concern today? That's what's called a trend day, which basically means if you were betting on the opposite side of that trend, you lost. If you were a day trader, you lost. And you were short all day, you lost. It happens every now and then. But the market's incredibly strong. The S&P 500 hitting a new high. All of this kind of coming after the Fed decision yesterday where they decided to leave rates unchanged, taper back the balance sheet a little bit faster than they expected. It had some negative things to say about the economy overall, just that we're slowing down, but that they're going to sit still and not raise rates. And if you remember the data that we gave you on that, what happens on average when the Fed decides to hold rates steady? In the next 30 days, the S&P tends to be up just about 1%. Well, we covered all that today, right? The S&P gained 1.09%, and the Nasdaq was the best performer. Tech stocks, big tech stocks, that was your leader today. So those did really well. Interest rate sensitive stuff, your REITs, your Homebuilders, things like that. We'll cover it all, but they did really well. Let's dive into the charts here if you'd like to see that. Here's the S&P 500 sitting at new highs for the year, breaking above this resistance area we seem to have been talking about forever. So you got a good idea of what's going on there. I'll use the QQQ to take a look at the Nasdaq. On fire. Absolutely just incredibly strong. If you're participating in anything tech related and you're not seeing these gains here, look at what's going on. Just see what you're doing wrong there. There might be just a little adjustment you need to make, but things going really well for the Nasdaq, obviously. And we mentioned last week or earlier this week, you're going to start seeing people say now we are X% from hitting highs. So if I look at the Nasdaq here, you're less than 3% away from hitting highs. And so obviously that's all-time highs, by the way. So a really good sort of thing there. If we look at the sectors, bad news first, financials. Right? It didn't finish as bad, but financials sold off again. The previous 2 days were the worst 2 days that the financials have had all year long as they kind of pulled back. Well, you can see it on the charts there. Regional banks, they pulled back as well. Remember, we talked about this yesterday, the disconnect between the two. Why did the big banks not get hurt as much? Regional banks got hurt more, and even today continue to get hurt more. Main reason is trading, right? The big banks, they do a lot of trading for customers and, of course, for themselves. They're able to offset some of that banking and loan pressure by the trading profits and other business activities that they have. Regional banks just kind of set up shop and they do what they do. They loan money out to people. They have checking accounts. They do auto loans, home loans, things like that. They don't have that trading profit there. And so if interest rates are going to remain flat, that holds a little pressure on their overall margin. Well, the regional banks tend to take it a little bit harder than all the bigger banks. Semiconductors, if you just spend Turn finance, Bloomberg, CNBC, turn it on for 5 minutes and you'll see that they're talking about semiconductors at some point within the 5-minute period, and rightfully so. It was up 3.5% today, best performing area of the market, and going all the way back to these highs now. Almost there, right? So if we play the same game here, you got, how much is that left? You got less than 2% until they hit those all-time highs. So really strong in the semiconductors. Now, a lot of that's due to just a few names there. You got Micron headed back into the 200-day moving average. They reported earnings. I tell you what, if you want a lesson on how to report earnings if you're a public company, go look at the Micron conference call and the comments from the CEO. He did a great job, right? They beat on earnings. They beat on revenue. That area of the market very much depressed right now. Memory prices very much low, oversupply in the category. So right now it's very hard for them to sort of turn the page. This is a highly discounted stock, by the way. They came out with earnings and said, yeah, we know things are tough. We admit that things are tough. We still beat our numbers. Investors love that. Now, what the CEO did really well is he started the conversation by saying, we see challenges in the next quarter, which is usually bad news, right? That's something that would hurt a stock price. He goes, we see challenges in the next quarter. Talked a little bit more, went on to some other nonsense, and then came back to, oh, but by the way, the quarter after that, we fully expect things to be better again. So he sort of like set you up for a little disappointment, came back and surprised you there at the end. That was intentional, 100%. It was very well thought out. And so stock price had a great day today, by the way, coming off those lows. We talked about this a little bit more yesterday. Just a little overhead resistance with that 200-day moving average. So you noticed a little bit of weak, that's where it stopped for the day. Tell you one other thing while we're talking about the 200-day moving average, go and look, if you can, or if you're interested, Apple today. It was upgraded. Some good news there. Needham was the ones that upgraded them. Yeah, it was a good call, right? Analysts had good things to say, obviously, about the services and the turnover of their new services offering, how that'll be less, which means more profit. And so the stock was hovering right at the 200-day moving average. As it sort of broke above, if you have any alerts set that tell you for volume coming into a stock, all of them said Apple at that very moment. It was like Apple, 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 Apple. You probably had a little short covering there, and anybody that was waiting for it to get over the 200-day, they dove in at that point. And you can kind of see it down here. Volume much higher than the recent average, not much higher than normal average. But if you look way in the background there, you see how volume's increasing today, hitting a high point. That was right smack when it started breaking above that 200-day. Everybody started piling in. All right, got a little off track there. Let's go back here to some of the other sectors. Home builders, very nice. So a nice bounce off the 200-day for the home builders. Interest rates staying same. If you follow a lot of the metrics, I might do a video on this for customers to show you all the different metrics in the home building category, how they're all ticking up. They're all looking a little bit better. Meaning in the short term, it seems like all that negative pressure from home builders and the housing market and stuff seems to be sort of stabilizing. Too early to tell, but as you look across the board, new home starts, permits, new applications, things like that, they're all starting to stabilize, and a lot of people going, well, hey, if interest rates are now also going to be stable, thanks to what the Fed said yesterday, maybe this is a good time to buy home builders. And so today, that's kind of the action you saw there, up 2%. I use the XHB, by the way, if you're following along. Looking at REITs, they almost hit new highs today. I'll use the ICF here if you want to look as well. What an amazing, amazing rally in this category this year. Our REIT fund, by the way, on our website, it's a REIT fund, right? So it's not like going to make you 50% in a year. Well, I mean, at this point it could. But the goal is obviously that's not a high-flying, fast-action type sector, but it's killing it, right? So incredible move there for anything interest rate sensitive. So REITs, you got Homebuilders in there, very, very well done. Tech was near the top of the list today, also for best performing. Here's the XLK if you follow along. This is going to be Apple related, and so almost back to those highs. Just really, really well done in broad big tech and interest rate sensitive areas of the market. Now, if I can just look at the S&P 500 today, you only had four names that actually hit new lows today. Biogen is one of them. I'm going to pull that one up for you. That's horrible. Biogen said they're scrapping plans for their Alzheimer's drug. The reason this was so bad is they had so much invested in it. You go, well, this happens, right? These biotech stocks, by the way, this is why I try to stay away from these things. You go, well, what's the big deal? They tried an Alzheimer's drug and it just didn't work out. They must try thousands of drugs that just don't work out. This was what's known as a late-stage biotech, a late-stage drug, meaning they had been through all stages, phase 1, phase 2, late stage, phase 3. They're like, okay, final trials here. This is going to be great. The data didn't come in very successful, meaning it wasn't worth it for them to push it any further. There was no significant change that made it worth them continuing. By that point, could you imagine the research, the effort, the marketing, the testing, the trials, everything that they do going into it? That money's essentially gone, right? It's just done. If you look at biotechs that have these sort of reactions, the average that it takes to recover is almost 2 years. That's the average. That's not every case. But you're looking at a breakdown today that you can almost guarantee is not going to fully recover tomorrow, right? You can kind of, this is the equivalent, you hear me say this every now and then, you fall out of a one-story building, we're all going to get up and walk away, some bruised a little more than others. This fell out of a 30-story building. This was a swan dive off of like a major building in a downtown area. Most, if not everyone, is not getting up immediately from that, if ever at all. So that's a serious, serious drop there. Anyways, that was one of the 4 stocks to make new lows today. A couple other things. Nordstrom made new lows, came off the lows a little bit, so it did close a little bit better, and it closed positive on the day, but did poke down to new lows. Tapestry, if you follow that one, I don't really follow these guys. It's a store, retail, not a store. They do Coach and I don't know. I don't follow it. Coach brands. They own a couple brands. Stock broke to new lows there. And Urban Outfitters, sticking with the retails, that was your 4th stock that broke to lows. And this is the only one that really pushed down and held. So not bad if you're looking at stocks making new lows in the S&P 500 today. Only 4 names, and a couple of them, right, they just kind of deserved it. They're having a rough go anyways. If you were to look at the new highs today, 58 total new highs. And if we were to just say, all right, did they just poke up to new highs and then stop, or did they close at new highs? Most of them closed at new highs today, or very, very close. One in particular I want to point out is General Mills. Remember, tell you ahead of time, not I told you so. We've been covering General Mills here, just talking about this sort of range, and if it broke above that range, that creates excitement for investors. It didn't mean that I suggest that you buy it. I'm just letting you know that there are moments on a chart that create excitement, even if only temporary, and today 3.6% gain. That was your sort of consumer staples stock that was almost perfectly at the top of the list for gainers in the S&P. Out of the stocks that made new 52-week highs. The rest of them are all going to be semiconductor related that are at the top of the list. KLA 10 Core, we call it CLAC. It's a really kind of a fun active trading stock if you like that thing. And Xilinx, just killer semiconductor stock, doing really well there. Other names, just if you're interested, Microsoft, new 52-week high. We'll do it quickly here. Salesforce.com, beast of a stock. Doing really well there. MasterCard also hitting 52-week highs. Very, very well. Very good for those there. All right, other stocks. You got Darden Restaurants reporting earnings. That's an interesting technical pattern today, by the way it broke above to those highs, closing just off the highs, up about 7% on the day. This is, I messed it up yesterday. This is Olive Garden and Longhorn. Is it Roadhouse? Longhorn Steakhouse. That's the brands. It's a restaurant brand that owns other restaurants. Olive Garden and Longhorn. Hey, earnings were good. Revenue was okay. Sales at the restaurants, that's something that people focus on. Nice little uptick there. And the company's very positive going forward. So sort of that triple whammy, like we've been saying, good news, the three-way good news sort of thing. Very good for them. ConAgra, they reported earnings today. It wasn't great, right? Overall, earnings were okay. They did better on earnings. Revenue could have been better, right? If you were to look at any sort of analysis of that, or anybody probably that's writing about it, that's probably not a lot of people, could have been better on revenue. However, the company is able to charge more, and people are just absorbing the higher prices. Anytime a retailer can do that, that's great news. If they can charge more, keep their margins in check, then obviously that's great news. That means going forward, they should have better earnings. We'll see. Levi, you like IPOs? Levi went public today. I believe it was earlier than planned. I thought this was going to be next week. You've got Lyft next week, but Levi went public today. Very successful IPO. If you follow this sort of thing, you almost can't ask for much better than that. About a 30% gain for the stock on its first day there. So that's well done. Well done. Oh, by the way, they have that dual class voting share. Did you see the video we did on Lyft? I did a whole breakdown of Lyft and their earnings and how everything's going, and the share breakdown. Scroll back about a week on our channel there. You'll see it, a week and a half or so. That one comes out next week. Levi has the same sort of structure. More and more companies doing this. Do you care? I don't know. It's a hot button topic right now. Hey, Williams-Sonoma, symbol WSM. That's another retailer. You're probably familiar with it if you're... you or your wife or your spouse is interested in cooking. I have this crap all over my house. I mean, if you want to pit a cherry or 3 of them in a row, I got a tool for that, right? From Williams-Sonoma. Use it once at Thanksgiving, and that's it. Okay, anyway, side topic. Earnings better than expected. Revenue better than expected. Sales overall doing well. So if you go buy this stuff, apparently doing really well there. And they... $500 million share buyback. So they're going to be another one to participate in that. Dividends a little bit higher. They were at 43 cents. I show 48 cents as the new dividend payout there on Williams-Sonoma if that's something that you're interested in. And ta-da, I think I've covered it. So that's pretty much everything I wanted to cover today. Walmart losing their chief technology officer. I don't think, I mean, that's a big deal, but I don't think it's like a crazy big deal. This has happened in the past. Briefly made headlines today. Jazz Pharmaceuticals. I hate these people because they stole my symbol. The symbol is JAZZ. They had a, what was it? They got FDA approval for a daytime sleepiness drug for those people that have sleep apnea. So look for that coming soon if you have sleep apnea. I don't. I sleep just fine. I mean, when I hit the bed, I'm out. And then I wake up and I do it all over again. Anyways, I'm happy to answer some questions if you have any questions there. Other than that, great day. You now, if you've been with us for a few days, even just watching for a few days, you're able to put the stats with the performance. I'm a numbers guy. I want to give you the definition, the reason, the history, the performance of why something may happen. Versus, you notice how I just don't come in here and say, well, I think this stock will trade higher and it'll be great and we'll all make a profit. I don't like opinion, right? I want the data behind it. So we'll cover that tonight. Little side topic. So we're going to do the high interest savings accounts, but we're also going to cover the yield curve thing. I'm pretty sure I'll have all of that complete. Just finishing up the data part of it. Yep. Cool. I love when you guys talk with each other. That's perfect, man. Oh, you like the video on Lyft? Cool. So Ryan's, thank you. I appreciate it. Compliments there on the video that we did about Lyft. Yeah, check it out. I appreciate it. Morningstar thanking us for the time. I just appreciate your watching. I love doing the updates. Keeps me engaged, and hey, if it helps get a new customer or two, then that's not too bad either. David, looking forward to Wine and Wealth tonight. We'll see you there, man. We'll see you there for sure. The way that works, by the way, if you're brand new or one of our new customers, 5-10 minutes. I just do real quick, teach you something new or kind of go over something, and then I'll stay as long as you guys want if you have questions. I can get into more detail in that because it's a sort of a closed class. But great. Oh, Tiago, is it time to start selling some calls? Sell on people's greed there. That's a tough one. You got the markets just a couple percent from all-time highs. Don't you kind of feel like it's just going to peak up there and test that? So I would be very selective, especially selling naked calls. If you have covered calls and you notice that the next few days sort of get us to those all-time highs, I couldn't blame anybody for wanting to sell calls against what is an obvious profitable position. I would think that's more the thought process there without giving any specific advice. Eric is asking, is Levi going higher or did we miss out? I'm very bad at this. I won't try to be a hero with everything. I do like to study the markets, history, data, and everything. IPOs, I love to talk and write about them. As far as the performance going forward, I hate tracking the data. It's such a hit or miss. Every time I've done any study on these, it's just so hit or miss, and so therefore I have a rule. I will not trade or look at a stock or include it in any portfolio, on our funds there on our website, if it has to have at least 200 days worth of trading. So 199 days to go, and we'll start talking about Levi. Yep. What's wrong with the yield curve? Well, so for the first time yesterday, the yield curve flattened to a point that was like 8 basis points, right? And so we wondered, like, is that normal? How often does that happen? And if that does happen very often, which it doesn't, what happens afterwards? What do the markets tend to do? Huge disconnect, by the way, between what the economy does and what the markets do. You know that, and I'm going to show this tonight, it's actually a very positive gain over the next 2 years and 12 months, and so I'll show it all, for the stock market. The economy has slowed down in many of these instances, but the stock market, in one case, even averaged more than gained more than 30% while that curve was flat, and the economy actually got weaker. So I just want to kind of put the disconnect. I got so many people going, the economy is going to go into a recession, yield curve's flattening, and is basically flat almost to this point. And I've got a lot of people saying, uh-oh, I'll just wait and I'll buy later. I'm going to show you why that is a very bad decision, not from an opinion standpoint. I'll give you the data. Love the show. I love it, man. Thanks. Nice. Steve says, I'm 51 years old. I'm doing a bit of Hail Mary investing between now and 65. I love it, man. Hail Mary. That's an interesting comment there. I appreciate you watching. GameStop, new CEO, right? They just announced that, I believe. GameStop is a tricky one here because, yeah, new CEO, they've tried to sell themselves unsuccessfully. However, the for sale sign is still out. So if you, it's tough because if you bought this stock now, you could be walking into a buyout. Somebody could buy the stock, and even if they bought it for 12 bucks a share or some creative financing, you've got that pending news that could be an issue there. So this isn't like a normal, oh, the company's fading away. Had they said, we're no longer interested in selling ourselves, that's trouble. They left the for sale sign out there. So Mass Effect, that's very tough for me to comment on that one because we don't know what they're doing right now. It's a bit of concern. I got 136 viewers. From what? Oh, watching this thing? Oh, I don't know where that's at. I actually can't see that part. Great, that's awesome. Cool. Disney, yeah. So Disney over the last couple days, I don't know if I'll show you the charts real quick if you're interested. So Disney sold off rather aggressively. The deal closed with them and Fox and all their assets. This is that price adjustment for that on the finalization of that deal. I believe it was Monday night, Tuesday when that closed. So this is that pullback kind of coming off of that. Happens, right? And look at the AT&T Time Warner thing. There is a period of time where investors can't quantify how they'll make that brand more successful, more profitable, etc. And so it could provide an opportunity discount-wise to buy a stock that falls. Do you think Disney is going to collapse from here? That's hard. That's a hard argument to make. So Morningstar, that's pretty much as far as my thoughts go. Short-term discount on the stock, it seems like. Yep. Cool. I love it. Tiago checks it out every day, loves the show. Well, we'll do our part here to try to keep it short, right? I try to just give you the goods and send you on your way so it's helpful to you. If it is helpful to you, maybe you'll hit the subscribe button or something, right? I don't know. We're doing pretty good on subscribers. I'm just flattered that people even care. But hey, if we help you in some way, great. Maybe you'll do that for us. If you need help, long-term retirement investments, things like that, many of our customers are also active investors and traders. We do the slow and boring stuff, but we do it well. You go do the active stuff, and we love to talk about it along the way. Or maybe you'll tell a friend. I just appreciate any help, and I appreciate you guys watching. We'll see you tonight. If you're one of our customers, back to work for me. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.